you'd be surprised at how many like really low-hanging fruit strategies there are that just don't exist because the tools haven't existed up to this point, right? Things like looping strategies, things like delta neutral staking. These do not require like massive amounts of off-chain alpha and proprietary information. Really, in some of these cases, it's just you need someone who's doing the computations, right? And you need a system that's able to run these strategies in a non-custodial, decentralized, transparent way.
What's up, everyone? Welcome back to another episode of 0x Research, a show brought to you by Flipside and Chainalysis. Today, we've got an awesome interview scheduled with Sommelier, a Cosmos chain that's kind of aiming to democratize yield opportunities on different EVM-compatible chains. We are joined by Zaki, who everyone probably knows by now, who's a core contributor to the Cosmos ecosystem and a co-founder of Sommelier. But then we also have Sun, who's a strategist of the protocol. So it's really an interesting conversation to get both perspectives. But as usual, we're joined by Matt and a new face, David, from the Blockworks research team to go through a little hot seat, cool throne. So David, I'll pass it over to you to kick it off.
Yeah, I appreciate that. And thanks for having me on here. So on my second week here at Blockworks Research, and came from being an avid listener to an actual speaker here. So the come up is real. So to kick it off, my cool throne is Coinbase. Hopefully not in bad taste, but this week they announced that they are going to be laying off about 20% of their staff in an effort to cut their OPEX spend about 25% quarter over quarter. So they're really doing what's necessary and tightening their belts in the depths of this bear market that we're in right now. Apparently the market liked the news. So the stock market, the stock pumped about 13% on the day when the announcement came out. And they're up about 34% this week so far. They provided some additional Q4 insights with their recent 8K report, showing that in Q4 they are going to be losing about $500 million, which is within their guardrail that they told to investors earlier on in 2022. But if you look at Q3 numbers and look at their potential to cut 25% quarter over quarter in their OPEX spend, this leads to about $300 million in OPEX savings every quarter, about $200 million net income lost every quarter, which actually extends their runway by a few years based on their current revenue stream so far. This doesn't include revenue streams coming from Coinbase ETH and also USD interest payments going up with the Fed hiking rates over the past couple of quarters. So there's a really good chance that in 2023, we see Coinbase going from cash flow negative to either neutral or positive by the end of the year. So I think they're doing what's necessary, and I'm excited to see what happens.
I love it. Yeah, we've been talking about Coin a while now on the past like 3 or 4 episodes, and I know Matt Hogan kind of kicked it off in the Bitwise episode, but I agree. I mean, they have 80 million active users every month, and they've also got their liquid staking derivative, which is going to garner significant revenue. I'm bullish on Coinbase, and I also like the way Brian Armstrong handled the layoffs. He actually like posted a page that was like, these are the people who are working here, everything you need to know about them. Please reach out to them if you're hiring in the crypto space. So I thought that was pretty respectable as well.
Yeah, additionally, I think that Coinbase is pretty well positioned with their CBETH liquid staking derivative to increase revenue in the coming years. A lot of people I think prefer to use Coinbase than maybe like a Lido or a decentralized alternative just because it's more familiar to them. So I'm also a huge fan of Coinbase. It's very upsetting and sad that they laid off all these people. I hope that they find jobs, but I do think that it's probably overall good for them, and the market definitely agreed with that. One thing that was weird was right after the layoff announcements, before the market opened, it actually went down. I forget exactly how much, but somewhere in the ballpark of 10%. And then throughout the day, once the market opened, it actually ended the day up 10%. So it's pretty crazy to see that volatility. But I do think that it corrected itself.
Yeah, I don't know if Coinbase is the real cool throne here, or if it's Sam, who like a week or two ago told us to purchase some 2025 options, call options on Coin. So I don't know. I think Sam's the real nominee here.
Yeah, I have blown up an options account before, so do not follow my trades. Any wins I get, I will lose them eventually. So I appreciate you putting me in that spot, but I don't know. I probably won't stay there for long. But Dan, that's probably a good segue to kick it over to you for your hot seat of the week.
Yeah, for sure. So I actually have BitDAO queued up. So, I tweeted in mid-December how they were pushing this governance proposal through to repurchase $100 million worth of Bit. And that ended up passing and going into effect on Jan 1. So over the past, they're recording this episode on January 12th, and over the past 12 days, they've been buying $2 million of Bit tokens per day. So they're going to do that for 50 days and hit that $100 mark. Now, this comes at a very suspect timing when there is a big bit unlock. So the token is a bit unlock of just under 2% coming, and that is ironically currently worth $84 million, and they're doing $100 million buyback. So I don't know. That's, you see these things like big announcements or product releases or token buybacks, and then of course you go check token unlocks, and what do you know? We have I think the phrase here that commonly gets used is engineered exit liquidity, which is hilarious, right? Like, is that what they're doing intentionally? No one will ever know, but this isn't the first time we've seen things like this. Like DYDX has a massive unlock, like some 60% of the supply. And that comes, right when they're trying to launch their Cosmos app chain, their V4 platform. Ape token has an unlock coming. We recently saw staking go live. It's just like token releases seemingly fall right in line with product development, which is interesting.
Yeah, I definitely think that it's going to be interesting to watch this year how all the OG DeFi protocols whose vesting schedules are completely finished, all these newer protocols that were come up that have their vesting periods kind of start for investors and founders, how it actually affects the market. And if I had to bet, I would think that ETH just continues to outperform all of the applications built on top of it, just because it doesn't have that structural supply dynamic of inflation.
So I just pulled up the chart, and it looks like on the last 5 bit token unlocks, it fell 16%. 40%, 20%, 22%, and 42%, and that was since August of last year. So it's pretty crazy that these BitDAO unlocks really have lined up pretty much exactly with huge drops in the price. And this engineered exit liquidity is the right word, and token unlocks are just one example of it. It's pretty crazy that it's so common in this space, and I think that people should be aware of that, and hopefully our listeners are.
Is there any such thing as bullish unlocks in a bear market, or is that just a bull market thing?
Yeah, I think a big part of it has to do with if perps are listed. Like if people, if the people getting these token unlocks, funds, people, organizations, whatever, have the ability to go hedge out their risk ahead of time, they're probably going to do it. But, if there's no perps listed or if the perps are liquid, realistically, the unlocks are probably not good for the price.
Matt, you want to go ahead and carry on with your hot seat of the week?
Yeah, so my hot seat this week, it's kind of obvious, like a give me, but it's DCG as well as DCG's portfolio companies. So in case you've been living under a rock, DCG or Digital Currency Group, it's kind of a conglomerate. They own a bunch of, DCG itself, it's a VC fund. They invest in seed rounds and early stage rounds for different crypto companies, but they also own CoinDesk, they own Genesis, as well as I believe a couple companies I'm missing, Grayscale, whatever. I think that those would be the 3. Anyways, there's been a lot of rhetoric recently about DCG having a hole in their balance sheet due to Genesis. So basically Genesis made a big loan, I believe it was around $2 billion to Three Arrows Capital. Three Arrows Capital defaulted on it. After the collateral liquidation, it sounds like Genesis was left with about somewhere in the range of $1 billion, $1.3 billion in assets that they were not able to cover. DCG gave them a promissory note that they were going to cover this loss, but in reality, it was actually, there was no money given. It was just kind of a promissory note that they would cover it. So it sounds like there's a lot of trouble there. From this morning, Financial Times and Reuters echoed this, that there's $3 billion currently owed to Genesis creditors. Supposedly, DCG is looking to liquidate some of their portfolio companies. So these include Chainalysis, BitGo, Blockchain.com, Brave, Circle, Coinbase, Coinmetrics, Dune, Etherscan. The list goes on. Pretty much every big company, a huge portion of the big companies in crypto, DCG has actually invested in. So these companies might see, it's not good for DCG. It's not good for the portfolio company. It's not good for anyone. Financial Times says that it's about $500 million in value of these portfolio companies. I'm not sure if that's true. I'm not even sure if the $3 billion is true. The only thing that's really confirmed is that they owe $900 million to Gemini and another $300 million to Bitbavo. So, it's kind of still unfolding, but they're definitely in the hot seat.
If that $3 billion liquidity hole is real, that's a problem. If you look at back in November, I want to say November 2nd, a week before the top of the bear market in 2021, DCG raised, they sold about $700 million of stock to Alphabet and SoftBank, I believe, for a $10 billion valuation at the time, peak bull market valuation. Ever since then, almost every single publicly traded stock that's related to crypto, as well as tokens themselves, are down 80, 85, 90%. So that means the parent company of Grayscale, and if Grayscale is $3 billion to their creditors, the entire parent company that owns the handful of other arms that you discussed, that entire company might only be worth $2 billion today. So we don't know if the hole's, real or not, but no matter how you slice it, DCG and Grayscale in particular is in a really tough position.
Yeah, that $10 billion valuation just blows my mind. I remember when Amazon acquired Whole Foods and like all their assets, like for $10 billion. So if you think about that in comparison, that's pretty wild. I don't know. Did you guys see Barry's like thread that he tweeted about? I personally saw like a lot of like really negative quote tweets, responses, and I know like he was the guy behind the wheel, but he seemed pretty genuine in it. I'm curious if you guys had any opinions on his take.
Yeah, I mean, Barry's been around since the beginning. He's one of the most OG crypto people that's still active in the space. I have so much respect for him. I would never say that I would never imagine or assume that he did anything like really bad. I think it was kind of just a terrible situation and that he got caught in the crossfire of a lot of other bad contagion going on in the crypto industry over the last year. So, like, I'm still a huge fan of Barry, and I hope that him and his companies are able to pull out of this.
I suppose I can kick it over to myself for my cool throne of the week. I'm going to go with G-Trade. It's a Gains Network. The governance token is GNS. They just launched on Arbitrum, and you're seeing basically up and to the right growth between both Polygon, where they kind of originated, and on Arbitrum, like metrics in terms of users, fees generated, volume, open interest, etc. They're kind of like the only venue that you can trade 4x. Which is pretty attractive in this like macro heavy of a bear market. So I expect that their success will continue. I also found it interesting that you basically are getting 20 to 25% yield being an LP in their DAI vault, which has been completely redesigned in like a much better way ever since they kind of faced some troubles with the UST Luna collapse back in May of this year. So they're just actually innovating, and it's one of the few perps projects that isn't just copy and pasting, GMX code. So I'm bullish on them, and I'm going to keep watching them succeed, hopefully.
Yeah, the Forex thing is super weird to me. Like, who who is trading this, right? Because if you think about, like, obviously that's one of the most liquid markets in the world, but the people trading it are like multinational corporations or international banks, like people who actually are hedging currency risk. That is not what's going on Gains Network. You cannot convince me otherwise. So I'm like, okay. So then the second group of people that trade Forex are like Instagram influencers. Like, are these people just like 100x leveraging these trades? I don't know. That just seems such a strange thing to me. But if it's working, good for them.
No, my thesis is it's Suzu and Kyle Davies. They were Forex traders back in the day before they got into the crypto space. They're trying to make it all back in one trade on Gains Network. So just wait for the Gains Network symbol to be next to Suzu's Twitter profile page in a few months' time. We'll know.
That's a funny theory, David. Yeah, it's pretty wild though. I mean, they've done 23 billion or so in lifetime volume, and GMX has done 90, and 70% of that volume historically, I believe, is 4x. So I do think they're winning that race. And then if you can get some of those Arbitrum degens from GMX over to Gains Network, I could really see Gains flipping GMX in volume and fee revenue. That's a hot take right there, and I'm probably going to get some nasty replies in the comments on that one, but I would stand by it.
One thing I really like about Gains is that they seem less afraid to, like, they have, not only do they have Forex listed, but they also have synthetic equities. You can trade, I believe, synthetic Tesla, Apple, a couple other ones. And I think that that's huge. Obviously, it brings some regulatory concerns potentially, but when you compare it to like a DYDX, a GMX, a Quenta, who don't have those same assets listed, I think it really gives them a leg up. Kind of similar to like maybe how like Sushi Swap's willing to return real revenue to token holders. Like GNS just doesn't care. They're not scared of the regulators. So although maybe that brings problems in the future, I do think that that's good for token holders and traders and just for their edge in the space for now.
As an honorable mention, I was curious if anyone saw that AWS partnership with Avalanche. Like, is that a nothing burger, or does that have some weight? David, I know you got some opinions on this one. So
yeah, if we would have done another round of hot takes, I probably would have put Avalanche on there. Just being in the space for probably a little bit too long. I remember the bottom of the 2018, 2019 bear market, multiple blockchains that really nobody ever heard of were announcing Amazon Partner Network sponsorships with AWS, one-click deployment of nodes to enable compliance and enterprise blockchain adoption. Still bullish on Avalanche, like what they're doing with subnets. I think it's maybe a little too early for them to take off, but got some bear market 2018, 2019 vibes from that So that's really my take on that right now.
Yeah, I think that's a good time to flip it over to Dan for chart of the day. But before I do, I want to take a moment to thank Chainalysis. They're an incredible sponsor, and they also just dropped their 2022 kind of year in review crime report. So they basically found that 0.24% of all transaction volume on chain is illicit activity. But they also said that the reason for this growth, the first time it's actually grown since 2019, is because of the OFAC sanctions on Tornado Cash and then also the large amount of bridge exploits. There's like a lot more information in the report, and they also have a lot of really cool courses online. So we'll link to that in the show notes, and I highly recommend you check it out.
And to jump into the Flipside Dash review, we actually have another Blockworks research special here. So this one is actually built by Effort Capital himself. So it's again built using Flipside data. I just took a screenshot of it. I've had this around for a day or so now, so it's good to have it. But it's a really interesting chart. Effort, you want to take us through this?
Yeah. So pretty much what you're looking at here is the largest in a given month. What liquidity pools on Osmosis are seeing the largest capital inflows or outflows by liquidity providers, in a given month, and this is bucketed by each individual liquidity pool by USD. So what we're seeing right now in the month of January, again, January 12th, for those listening, the largest liquidity outflows by liquidity providers in the month of January so far is in the Wrapped ETH Osmosis pool. At the beginning of the month, that pool in particular had about $12 million liquidity. And right now it's sitting at about $9 million liquidity. So it's lost almost $3 million, month to date. My thesis is you saw a large outflow of liquidity around January 5th, January 6th. My thesis is that with the whole liquid staking derivatives narrative, a lot of people are starting to get bullish on staked ETH and different variations of that, like Rocket Pool and Stakewise and whatnot. So there could be a lot of Wrapped ETH outflows happening from Osmosis, going back to ETH main chain, deciding to liquid stake it, and then try to double on their yields in potentially their ETH DeFi, or potentially if Osmosis comes back with like a staked ETH liquidity pool, you could see liquidity come back to the Osmosis chain. But that's really my thesis on why you're seeing such large capital outflows right now.
The TVL chart of Osmosis is pretty sad, honestly. But I mean, it doesn't really surprise me. We see ETH outflows from Osmosis potentially. Like, that narrative doesn't seem to shock me. We have Mars Protocol coming to the Cosmos ecosystem, which I really do think has really big catalyst potential to kind of drive some of that DeFi activity. You actually put out a great thread about like the potential for a Cosmos DeFi summer, which you kind of need leverage for that to happen. That's just kind of how what was played like a key ingredient in the last DeFi summer. So it'll be interesting once that ecosystem really starts to mature. And Osmosis as a whole kind of has some very interesting things going on. They're talking about how to like cut back on admissions, since they're really not competing against anybody else as a DEX in the Cosmos ecosystem. So they've kind of been redirecting emissions to the community pool and doing some interesting things. So it'll be interesting to watch that play out. But this again, I want to give Flipside a little special shout out here. They make things like this possible and really allow analysts to have a job, basically. But even better than that, they allow anybody to go on chain and study what's happening. And that's what's really interesting to me, is the fact that they can do all this for free, right? You get unlimited query execution at premium speeds for free. You get unlimited dashboards for free. It's the best querying platform out there, and there is no second best in the world. Words of Michael Saylor. And be sure to check out their new web app. It continually is improving. It's still in beta, but every day I log on there and see a new little improvement they've made, and it's a great way to really get your hands on and start studying blockchain data.
All right, I think that's a good time to cut it. Thanks for coming on, guys. Over to Sommelier.
Welcome back, everyone. We are joined by Zaki and Sun. Zaki is the co-founder of Sommelier and a very active participant all throughout the Cosmos interchain. And Sun is the co-founder and CEO of 7Cs, which is an investment firm that is building strategies on top of Sommelier. So we have this really interesting perspectives from, right? We have the builder of the base layer, and then sort of someone on that application level that's really taking what the base layer is offering and building off of it. Guys, thank you so much for joining us today. Really looking forward to this one. Maybe I'll throw it to you first, Zaki. Can you kind of give us a little bit of a brief intro of, what Sommelier is, and then we can kind of dive into some of the exciting developments that you all have going on.
Yeah, so Sommelier is a product that we've been building for this, it's been almost 2 years. And like, so this is a big milestone because like much of the like this is like finally the culmination of like all the core protocol features are actually sort of coming out this month. It's the so what is Sommelier? Sommelier, I guess our sort of buzzwords are actively managed asset management on chain, and providing access to DeFi, right? And so the whole point is that like on Ethereum and other EVMs, which is what we support EVMs right now. There are a variety of different financial positions that you can take, but how do you decide? What assets to hold, where to find yield, all of this stuff, and how do you monitor and how do you react to that? And so, the sort of the vision that started with Sommelier is myself and the rest of the team that built this thing. Started out watching DeFi Summer and spending, hours, clicking and signing, clicking on your ledger and signing, clicking on your ledger and signing, oh, there's this, now I got to move my money between these things, and like, it was really fun, but it also takes over your life. And it's like, okay, this is not like a thing for the real world, right? This is this was a fun thing to do during like the pandemic when no one could go outside, but this is not going to be how we're going to spend the rest of our lives. And so Sommelier was sort of born with that vision of of how do we make DeFi really accessible and sustainable, without having to compromise at all on like robustness, resiliency, transparency, self-custody.
Yeah, fantastic. And, it's built as a Cosmos app chain. So I'm really curious, how does that kind of give it some advantages over maybe something that's just a single contract or a series of contracts built on Ethereum?
Yeah, I mean, so I think like one of the biggest things that we have is like EVMs and Ethereum in particular are still like sort of the home of DeFi. And, we see expanding DeFi, lots of exciting DeFi stuff happening in the IBC ecosystem, lots of stuff I believe that DeFi will expand into the world beyond the EVM world, but it's like, look, that's where the TVL is, that's where the usage is. And honestly, there's a maturity there that has allowed us to do things. But why have an app chain? And so, it's one of the things that we've done is like, so if you're a user of Sommelier, you don't have to worry about the app chain at all. You don't have to stake Som, you don't have to bridge tokens, you don't have to do anything. Like you go in, MetaMask pops up, you can interact with it, you can buy strategy tokens on dexes, you just aren't, the app chain is not like in your face. But if you're a strategist that's who's interacting. If you're a strategist, you're a validator, you're a Som staker, you're participating in governance. These are the people who are providing the infrastructure to make this app happen, and that all of that incentive alignment. So everything from rev. So there's lots of cool stuff that we do. Like we do rev shares from these strategies. So if the strategy is successful and as it generates management fees, those get shared out to Sommelier stakers. We have mechanisms by which we can fail over strategists. So if a strategist disappears, the strategy doesn't immediately become sort of just unmoored and it can be put into a safe state. There's a lot of, so these kinds, that piece, this whole utility layer and incentive alignment layer for the validators and strategists run on the chain.
And so, before we kind of get into some of the more exciting innovation that's really coming, within probably days of this podcast releasing, I just want to get a further understanding of what does it look like if I'm a user, I come to the app chain, I deposit my funds to deploy into a strategy. How do those funds actually move from my deposit to, being actively used by the strategist?
So I can already just make one amendment there, which is that as a user, you don't actually interact with the app chain. There's a smart contract, which is a vault. It's the same thing as a vault product, which sits on the Ethereum chain right now, and you interact with that smart contract directly, right? So as a user, you come to that smart contract, you deposit into that smart contract, you receive tokens that represent your share, and then that smart contract is doing interesting things and running interesting strategies. And the key aspect of like what's interesting about the strategies, that's where the Som chain comes in, right? So I think we can get into more about architecture, but as a user, you don't even have to know that an app chain exists, right? You can just interact with that smart contract and rest assured that your funds are secured on Ethereum, like main chain, right?
That's super interesting. Yeah, I was going to ask the question, like if you're deploying like a multi-chain strategy, the first thing that comes in my head is like, is that safe? So I wanted to ask you a bit about bridge risks, if there is any bridge risks, and how you were thinking about security.
Yeah, multi-chain is kind of, and I'll let Zaki get more into it. Multi-chain is kind of, on the roadmap for Sommelier and for like 7Cs to run multi-chain strategies. Right now, our strategies are all running on ETH mainnet. We have plans of supporting other EVMs, like Avalanche, Arbitrum, etc. But right now, there are no multi-chain strategies. And that being said, there are no bridged assets in this like strategy architecture. So the Sommelier is a L1 Cosmos chain, right? And it is the bridge that bridges Sommelier to the Ethereum ecosystem is called the Gravity Bridge. It's actually a fork of the Gravity Bridge that people may have heard of, but this is a proprietary bridge to Sommelier, and it is a message passing bridge. So the way it works is strategists will submit signals to the Sommelier blockchain. The Sommelier validators come to consensus on whether those signals should be accepted, and those signals are rebalanced. They could be rebalances, trades, etc. When consensus is achieved, that signal is then passed through the bridge to the Ethereum side to be executed on that smart contract. So in this whole flow, right, like user assets are sitting in that smart contract Ethereum and it's the signals that strategists come up with that are the ones that are propagated through the Som side over the bridge and into the Ethereum side. So no bridged assets in this workflow.
Yeah, and I think that's kind of one of the core value propositions really around why, like the advantage of really a Sommelier, right? Like, so, if you're someone who's only ever used Ethereum, you do have this like thought process of, hey, I really don't want to bridge my assets off. And this gives you the ability to kind of get this benefit of the, a strategist managing kind of the deployment of your funds, yet you don't have to actually bear any bridge risk. And I think that's like the really kind of like a unique perspective. That's something we really haven't seen. So if we want to get a little deeper into, what the development that's coming out, we have Sellers V2 launching. Zaki, do you want to kind of give us like an intro of how this kind of takes the protocol to the next level?
Yeah, so Sommelier has been live since July, and it's been an incremental process of delivering strategy. So our first sort of proof of concept strategy was a smart contract that all it could do was, hey, Aave, here's a bunch of Aave positions, actively rebalance between them. Then what we were able to do, then what we went to from there was portfolio management strategies. So we have these like ETC trend, ETC momentum, portfolio management strategies for Matic and Uni and ETH and Bitcoin. So there's a number of those. We have two different strategists that are not here providing strategies for those, hoping to onboard more. And that's not going away in any way, shape, or form. But really, one of the big things that Sommelier wanted to do was not just trading strategies, but what we wanted to do was provide access to DeFi. And so in order to provide access to DeFi, we had to, Kevin Kennis and Crispy Mangoes from our smart contract team dreamed up this architecture, which I think you're starting to see across like more and more. It's become sort of like the state of the art of vaults, which is what people call the adapter architecture, where you basically have this like pluggable sort of Lego blocks that by which vaults can plug in. So now we have this whole pipeline, which is like the interface is what's called an ERC4626 token that is like a token standard for vaults. Those represent the NAV of the whole position, and the whole position can actually be across every DeFi protocol that there's an adapter. So we have like Aave Lend, Aave Borrow, compound lend, compound borrow, trade on Uniswap, LP on Uniswap, right? So like basically the full surface area of all of the possible interactions. So now as a strategist, if you're, your 7Cs, you can get to come up with like sort of the entire possibility space of the combination of those two. The minute we get another adapter audited, we don't even have to like redeploy the strategy. You can deploy that adapter, plug it into the Legos, and now there's another source of yield and another source of yield and another source of yield. And as long as there's more DeFi stuff coming out that we can plug into on Ethereum and other EVMs, we can plug them all in even to existing sellers. But so there's like a whole, like everything from what I think we're the forthcoming product from 7Cs, which is the Real Yield USD, which is going to be the first use case for sellers V2. But like you can build something that uses, you can build a product that goes short using, borrowing and selling. You can build, there's just, leveraged long positions. You could build a product that like tries to insure against depeg risk of a stable coin. Like there's all kinds of stuff that you can build. And so like, yeah, there's like today is a big milestone in terms of just like the possibility of space of everything that can possibly be built on top of Sommelier, and each adapter sort of exponentially kind of increases the possibility space.
So for the adapters themselves, like what would the long-term goal be? Would that be to, your team keeps continuing to build these out, or eventually does it hit like an inflection point where if I am a DeFi protocol, it's in my best interest to like build this adapter and connect to Sommelier?
I think we're hoping that we can demonstrate that is a really important thing for like a really important. So here, there's two reasons why I think this is like why we believe that like we should be able to start seeing community and DeFi protocols sort of bring in their own adapters relatively quickly. And the reason we think that's the case is that most DeFi protocols, it's pretty hard to like, guiding users through these DeFi protocols is just a challenge for every team. Like, I want to take this position. Okay, like where do I click in your thing to like achieve that position, right? And then like monitor that position, unwind that position. Is that position still the best position? That all of these things are huge challenges for every DeFi protocol when they're onboarding their user bases. And Sommelier is basically a solution for that. And we're an infrastructure for that. And, the world I want is not a world where most of the strategies that are using Sommelier, have come from app.sommelier.finance. I want a world in which every DeFi protocol is like, look, I built my new DeFi primitive. I'm also going to spin up a Sommelier strategy. We don't need to be integrated into their website or UI or anything, or nothing other than telling governance, okay, run this strategy. Here's the fee split. Like, this is why it'll make you money. Go run it. Like, we're just like the protocol at the end of the day is just, infrastructure as a service for securely providing non-custodial active management.
And I just want to add to that it's already the case in the Sommelier ecosystem that people can come and build adapters. There was a hackathon actually at ETH Lisbon for this very thing, and there were teams there that actually built adapters that will be audited in the coming months and hopefully released. But already, for individuals, teams, protocols, there are already opportunities to come and build adapters and integrate into the strategy ecosystem that we have.
So it sounds to me like Sommelier is only as good as its actual strategies. So how do you actually incentivize strategists to come and, come up with new innovative strategies that can be utilized by users? So, like a lot of Vault products, Sommelier sellers have the opportunity for management fees and performance fees. There's essentially a whole governance process to get a strategy accepted onto the Somm chain. Basically, you deploy the smart contract. That smart contract contains the parameters for what fees are going to be taken. So, is it 2 and 20, a management performance fee, whatever it is. Then there's a voting period, right? The Sommelier community has to say these numbers are reasonable. We're going to accept the strategy. And then the strategy runs, right? And again, users can come to Ethereum and deposit. The strategist can execute actions through the Sommelier blockchain.
on that smart contract, and they have opportunities to earn. So that's like a standard model, right? But what I think is particularly appealing about Sommelier that you don't have in existing offerings, right, is this ability to take your off-chain computation, right, keep that like optimization or whatever strategy you have in your backend proprietary, right, but execute that on-chain in a transparent and decentralized way, right? So, whether that's some, interesting trading strategy you have where you don't want to release exactly the parameters of it because you can get front run or whatever, you lose your alpha, you can actually keep that off chain, right? And all that you have to submit on chain is the result of those computations. So that's one piece. It's the ability to keep your algorithms proprietary. The other piece is that Sommelier is, through this adapter architecture, currently and is going to continue to support increasingly more DeFi integrations, right? So basically, the state of the art is like you have two kinds of things. You have active management, portfolio management, right? These are protocols like, Enzyme or DHedge. And then you have like vault-based products, which are more static, right? The logic is pretty much all encoded in the smart contract, things like Urine, Beefy, whatever vault product you have. But Sommelier is the first product where it's the best of both worlds here. You have active off-chain computation, whether that's machine learning or whatever, and you have access to all of DeFi, limited only by what adapters we have built or what adapters exist, and you can always build one yourself if you want.
So, Son, as a strategist, what are you most excited about with Sellers V2? Are there any strategies, maybe specifically around like stablecoins that you've been backtesting and are ready to deploy?
That's a great question. That is exactly the case. So I've been like involved in the Sommelier ecosystem for a very long time. As Zaki mentioned, we've been waiting a long time for the Sellers V2 vision to come to fruition. In fact, 7Seas is the one operating that kind of inaugural Aave seller, which is really more of like a proof of concept of the system. But what we actually wanted to launch back then was this new stablecoin product, which is now enabled by Sellers V2, which we call the Real Yield USD seller. So, the name kind of tells you what that does. Basically, this strategy is going to be, it accepts USDT, USDC, and DAI, and those are the assets that the strategy will have exposure to. And it maximizes yield on Aave, Compound, and Uniswap V3 LPing, with no leverage, again, no short positions or anything like that. It's purely lending on Aave and Compound and then LPing on Uniswap V3. But, we have some very promising results from this. I can say that there's a lot of alpha in Uni V3, which does kind of require some off-chain computation to fully take advantage of. I think we're all really excited to launch this first product, which will be the first of many on Sommelier.
So it's a really interesting concept, especially with Uni V3. I do agree that there's just a lot of hidden alpha there. The common CT crypto Twitter statements are always like IL is eating you up and whatnot, but the reality of the matter is there's a lot more complications that are going on behind the scenes, and it wouldn't surprise me if there's a subset of people that are really extracting a majority of those LP fees. So that's really exciting to hear, and creating these these vaults that only have exposure to stablecoins. So I would assume that means all of the LPing on UDV3, for example, would only be in stable pairs. Is that right?
That's exactly right. Yep. It's a stablecoin vault. And there's a lot there, I think, like you said, there's definitely opportunity, particularly, impermanent loss is, and that could be its own topic, right? But impermanent loss with stablecoins is interesting. And there are actually ways to be profitable here. In fact, I think this is, I think it's one of the, LPing stable pairs on Uniswap, I think is one of the only truly profitable things you can do on Uniswap as an LP. That might be, it's a bit of a cynical position, but at least that's how I feel about it.
Maybe the only thing truly profitable thing you can do purely on chain.
How do you think about delta neutral strategies? Like, do you guys ever stake an asset and then potentially go short that asset and capture the yield? Or, you see a lot of vaults being built on top of products like GLP in the case of GMX. Like, how are you guys thinking about that?
So yeah, that comes down to, okay. So there are three things that's like, it's it's January 2023. The crypto market is in meltdown, and Sommelier, we have like 3 things to launch. Sellers V2, which we've been talking about, and then staking rewards are coming to the platform. So I had mentioned that we, that fees accrue to the stakers on the platform. Right now, fees have been accruing, but nothing has been distributed to the stakers. And so we have a release that's coming out that'll sort of activate staking rewards, and that's also like imminent, days, weeks away. And then the third piece is multichain, and probably the most asked for adapter to the protocol from strategists is GMX support. So, to do GMX support, we have to do 2 things. We have to launch on the Sommelier protocol support for multiple EVM chains. Right now, we're just on ETH L1. And the second thing we have to do is write that GMX adapter. So those are like 2 pieces that are all, and it's like all of that stuff is like 95% done.
Yeah, basically it's like hard to do, like act like aggressively hedged, any kind of aggressive hedging on ETH, right? There's no great way of going short. There's no like interesting options available. Everything's just too expensive. So nobody's built these things. I mean, you could do like over collateralized shorting on Aave or whatever, but that's not that interesting. But, as Zaki mentioned, as soon as we have access to some of these other chains where it's less expensive to do these things, that's a whole new world of possibilities that we're excited for and that we'll get access to in the not too distant future.
If you can't tell, we love data here at Blockworks Research, and Chainalysis, the leading blockchain analytics company, shares this passion with us. We use data to extract alpha and find the next thing coming in DeFi, but Chainalysis is doing the gritty work and building trust in blockchains. To onboard the next $1 trillion of capital into the industry, we need to grow safe consumer access to cryptocurrency and promote more financial freedom with less risk.
Chainalysis has some of the most comprehensive and reliable data in the space, and they use this data to power a full suite of their solutions that can be utilized by industry professionals. Best-in-class training and certifications are also led by Chainalysis and some of the brightest minds in the space. If you haven't heard of Chainalysis, you got to check them out, and we'll link to them in the show notes.
Capital is really this finite resource that all of these DeFi protocols are kind of like, attempting to acquire. So it makes a lot of sense to me that you would start on Ethereum. TVL on Ethereum is something around 24 billion. I think the runner-up in that category is Binance Chain, coming around 2 billion. So, it does make a lot of sense to start there. But, I think there's a pretty good case around having the Cosmos ecosystem itself having its own little a DeFi summer, if you will, right? With the launch of interchain security, Mars protocol coming to the platform. So now you have lending, both lending and a DEX through Osmosis. Like now it kind of starts to see like there's getting some traction in this area. Do you think I assume adapters are certainly possible in the Cosmos ecosystem, but does that process look any different?
Cosmos. So I'll say like one of the biggest tricks that I am. So when we build Cosmos support into Sommelier, it is going to be look very differently than the product we have on the EVM. And one of the biggest things is that like we don't build sellers right now that we don't build strategies that can hold positions that cross chains. But if you want to build something, most likely for Cosmos to like, this represents like an interesting question. This is like kind of like why building something on top of Sommelier was possible on top of the EVM ecosystem at its current level of maturity, but like hard on top of Cosmos because there's so many unknowns, right? And like one of the big unknowns for me is like, are there going to be like non-trivial strategies that are non-trivial strategies going to be primarily on one chain? So like, do we just need to build like connectors to Osmosis, for instance, and then there'll be like an Astroport out and a Mars outpost and all of that stuff, and basically people will just run Osmosis strategies via that. And if that was the world we end up in, we can build a very similar user experience to what we currently offer on top of ETH, on top of chains like Osmosis, Injective, etc. But Cosmos being Cosmos, we might also end up in a world where every where like you have to, in order to coherently build a strategy, you have to actually have positions that cross chains. And if that's the world that we end up in, then the one big thing that is a really important, like right now, the way Sommelier works is any user of any strategy can enter or leave at any time. Now, this is not like an immutable fact of like the strategy concept or anything. Like there might be good reasons to change this user experience for various strategies. But we started out at this position of you can leave at any time. And like there are a lot of interesting composability things that come out of that. Like for instance, you could take leverage on the strategy token itself, right? Because a liquidator can liquidate from this, can like go from the strategy token to the underlying more liquid assets very easily. So these things are cool, but if we want to do that, anything you want to do multi-chain, you end up building a system in which there's like a window of time in which you can exit and there's like a queue that you wait in to exit, and then it's like more like unstaking and staking, where you're like, I unstake, and then like the hour of where you're allowed to bring your funds out like happens, and like everyone's funds comes out, and like I put my funds in, but like everything doesn't get deployed, and I don't get my LP shares for like until that like window happens. And so it's been a little bit of an interesting question, and I think it's a big open question for Cosmos, which user experience we target. So this has been to me the like sort of little bit of existential debate about how you build something like Sommelier for Cosmos. And mostly I'd like to just see more DeFi running on Cosmos to be able to like understand roughly what we're building towards.
Yeah, really valid points there. But one thing you mentioned got me thinking, and it's okay. So if I'm a user, I have, let's say USDC on Ethereum, I deposit those into a Sommelier contract. So of course I never took bridge risk because my funds are already on Ethereum. As the strategy is generating revenue, the strategist or the Somm stakers and validators are entitled to a portion of that revenue. So how does that revenue flow from the vault on Ethereum back to those stakeholders?
So those folks get to experience the joys of bridge risk to a certain extent. So basically what happens is periodically we sweep up. So like funds, like accrual is happening constantly. So like fees are constantly getting accrued. They can be pulled up into fees are getting accrued at the Ethereum layer. Then periodically, the protocol sweeps those fees up into the Cosmos layer and bridges them. Then we hold an auction on the Cosmos side where we sell all of these different tokens that we've bridged we sell all of those tokens for Somm. So someone has to show up, take unstaked Somm, buy those tokens, and those tokens that they've sold in the auction, those then become the staking reward, or like a contributor to the staking rewards of the protocol. And so, and what we do after the auction is like we sort of smooth out over about a week. Otherwise you would just get like one block where you had really high yields, and then like every other block would be like low yielding, much lower yielding. So instead we like smooth out over a week the results of every auction.
And then does a portion of those fees go to like the Sommelier Treasury? And then also with Circle Chain coming to Cosmos, is that process going to change in any way, or is it going to remain exactly the same?
No obvious impact on the Circle Chain as a thing for Sommelier in the short run. To answer the easy part of that question, the sort of, these are parameters that the community gets to adjust, typical to a Cosmos chain, about like what fraction of those tokens end up going into the community treasury. One of the other things that's like sort of a thing with Sommelier is a very large fraction of the initial tokens supply. So a couple of things. Somm is a non-inflationary token, unlike basically every other Cosmos chain except for Kujira. Apparently Mars will also be non-inflationary. I'm glad to sort of see this trend towards away from hyperinflationary Cosmos chains and Cosmos tokens, but Somm has been a non-inflationary Cosmos token, 500 million Somm. That's all that exists. Maybe governance could decide to create more, but like that's not something that we view as something that we imminently see happening, or really hopefully see in the foreseeable future. And so as we've been doing liquidity mining, there's going to be some capability of using those tokens, community fund tokens, to also supplement staking returns. All of these things are just coming out of a community pool that has about 150 million SOM.
Interesting. That actually, you kind of brought up a point. Cosmos does have a lot of inflationary tokenomics of a lot of its chains. So I was curious if it's kind of hard to get people to deposit for maybe lesser yield into Sommelier when you have staking rates so high on, Osmosis, Atom, et cetera.
Yeah, I mean, I think so. As we launch the staking rewards later this month, we'll see. There's a bunch of parameters that the community that the STOM holders get to tweak. Just that, because right now the staking rate on SOM is really low, so not that much. Like either pulling from the in terms of fees and contributions from the community pool to staking rewards are needed to drive like relatively competitive APYs, but presumably that would cause the staking rate to rise. And it'll be it's going to be an interesting thing. But really, I'm hoping, as we've seen, like a lot of the really inflationary tokens in Cosmos really have their, value plummet in the bear market, and liquidity really dry up. I think that one of the most important things that we have to see happen this year is a pivot to sort of more sustainable tokenomics in Cosmos.
Yeah, I think it's hard to dispute that claim right there. But if we took a back step here, and let's say, I want to get back to the vaults for a second. So if let's say, after this recording, I'm immediately go to backtest some crazy UniV3, strategy that I have potentially come up with. Would I be able to just go to the Sommelier platform and immediately launch my vault? Is that process permissionless, or is that something that's governance gated, governance approved?
Yeah, there is a governance. Getting a strategy accepted to Sommelier is a governance process. Basically, what you would do is, first of all, the Uniswap v3 adapter is out there and the seller contract is out there. It's all open source, right? So you would grab those contracts, deploy your own contract with the parameters that you decide. So you would pick your fees, right? And then you go to Sommelier forum and you say, hey, here are some backtest results. Here's a contract that I deployed. I want to run this as a SOM strategy. There's usually a discussion period for about a week. Again, these are just kind of informal things. Then after that discussion period is when the formal vote comes. You would submit your actual governance proposal to have that smart contract accepted by the SOM chain. There's a 48-hour voting period. If there's enough turnout and enough support, that smart contract will be automatically accepted by the SOM chain and essentially start accepting signals from the strategist, which is you in that case, to start executing actions on that smart contract.
Right. Okay, that makes a lot of sense. And so it seems like the strategists really do play a very key role in this ecosystem. Just granted that if there are no great strategies deployed, then as a user, I might have $1 million of funds just looking to, find some yield, but this wouldn't be an opportunity for me if I didn't feel comfortable with the strategy. So how do you think about attracting more strategists to the ecosystem? Or if I'm a strategist, am I trying to just spray and pray, or is it about having one really good, maybe 10% yielding stablecoin type, or maybe beating the Ethereum stake rate strategy, kind of something like that?
I think it's a bit of both. So generally, this is actually an insight that I got from Zaki, which is that with the old kind of portfolio management version of Sommelier, where it's trading strategies, portfolio management, those are situations in which it's heavily dependent on state of the art, bleeding edge alpha, right? To make it as a trader is one thing, but with Sellers V2 and DeFi integrations and DeFi infrastructure, you'd be surprised at how many like really low hanging fruit strategies there are that just don't exist because the tools haven't existed up to this point, right? Things like looping strategies, things like delta neutral staking. These do not require like massive amounts of off chain alpha and proprietary information. Really, in some of these cases, it's just you need someone who's doing the computations, right? And you need a system that's able to run these strategies in a non-custodial, decentralized, transparent way. I think there is a world here where it's like, people have ideas. In DeFi, people have ideas all the time, especially in this market. The people who are left are the ones who are really deep in the technology, right? They know their stuff. They care more about things like alpha and, research. And so, we think with V2, there's a huge space of strategies that's been largely unexplored in the space and some really low hanging fruit. So hopefully that attracts people. 7Cs as a team is going to continue to develop these strategies. We have some low hanging fruit ones that we see that no one's doing that we're going to be developing. But, with Sellers V2, we think that the technology is attractive enough for and offering opportunities for strategists that just don't exist elsewhere.
Yeah, if you pull up the DeFi Llama Yields dashboard, I scroll through there, almost daily, and you see these massive arbitrage opportunities that sometimes have decent size to them. And it's especially in a market like this, right? Like you mentioned, nobody's left. So these opportunities do exist, and they very much so are low hanging fruit, which is just this fascinating side of crypto and DeFi that, markets are very much so not efficient at this point in time. So I think this is actually a great use case for bear market strategies. And so as the strategist, like you get the opportunity to do a lot of this computation off chain, even though it's a non-custodial position, right? All the funds remain on, currently on Ethereum. And so if you run some calculations and determine that you need to rebalance a specific position or strategy, what does that process look like as a strategist? Because I understand you go through the validators or the SOM governance.
Yes. So yeah, I can, 7Cs has spent a lot of time, with this integration with SOM, so I can speak in good detail. I won't go too into the weeds, but basically, you have an algorithm off chain, you make a rebalance decision, and now you have to get that executed on the smart contract that lives on Ethereum. So the flow is that there's the validator, the Sommelier validators are running software called Steward. Steward is essentially the interface between the validators and the strategists. And what Steward allows strategists to do is take those rebalance decisions, send them in some specified way over, technically it's a gRPC call. And so that's the interface, right? So strategists, first of all, can see what they're allowed to call. It's what Steward exposes to them. That can be a function like rebalance. It can be a function called buy or sell. Essentially, it's providing the interface to validators. Once that's sent to validators through Steward, again, so the strategist right now sends the request to all the validators through Steward. The validators come to consensus there. And then the process kicks off to actually submit that to Ethereum. So, there's a relayer, the signal goes through the Sommelier gravity bridge onto Ethereum, and it gets executed. But as far as a strategist is concerned, Steward really provides this very simple interface, essentially like it's almost like as simple as a HTTP request, right? It's capabilities that most data science or like fintech or whatever kind of firms already have. And this is actually another thing that we consider a value prop of this system, which is that you can take people who have very limited blockchain experience, but they have alpha and they have strategies, right? And they're now able to run that through this interface of Steward. Zaki, I don't know if you want to add more detail on that.
No, I think that was. I mean, you've been in the battle to execute. One of our strategists, over the last few weeks did have some challenges with the execution process. And that's a big part of the sort of just maturity of the whole protocol and software check is, multiple layers of, one of the reasons this, has taken a while and is like, it's a complicated protocol and, we started out with this like Aave strategy where like execution risk was zero, right? It was just all in like stable coins and Aave, and it was like, okay, like what's the worst thing that can happen? Like we miss out on a small amount of yield, right? And then we moved into these trading strategies where we're trading like blue chip liquid assets. Again, you there's some opportunity cost potentially too, but you're not like a risk of catastrophe. With sellers V2, as we start entering into these more exotic positions that you're able to take, the risk of loss on execution risk is going to be higher. And hopefully we can take all of the things that we've learned over the last 6 months or so of execution on chain via the SOM protocol, and provide a higher level of risk. But we're starting out. 7C's first strategy is not doing anything too crazy with these stablecoin positions.
I will add one thing, which is that there is latency introduced by this system, right? Like Sommelier is essentially adding an intermediate layer between the decision to execute an action and then the actual execution that happens on Ethereum. So right now that latency is on the order of like a few minutes, which can be significant. I mean, that does preclude running, some really high frequency strategies. So there are strategies right now that aren't actually a good fit for this system, but that just kind of comes with the territory.
How do you think about risk? Like, is there any type of insurance fund in case of like a smart contract hack or anything like that? And if not, is that like a thought to implement maybe in the future?
Yeah, we haven't, we've mostly taken an approach to risks that has been investing heavily in auditing. And so, we have made a massive and very long-term investment in auditing of our protocol, of our work and our protocols. The concept of insurance, like both doing an insurance fund, and one of the other things that we've been actively in conversation with is there are a couple of actual smart contract providers out there as well, and some potential users of the protocol have been interested in like actual insurance. So both of these are possibilities, and potentially something that we would like to do in the future.
And then I guess just like when I think of Yearn, like I'm pretty sure that a lot of their vaults are managed by like a multi-sig, but then you guys actually have a validator set. Would you say that the decentralization is kind of one of the main value propositions of Sommelier? And is that like maybe something that might lure in institutions?
So one of the things that we wanted to be able to do with Sommelier was to give a lot of comfort to people who are both on the strategist side and the user side of like what are they actually dealing with from a regulatory point of view? Like, are they actually dealing with a decentralized protocol, or is this just like an excessively complicated multi-sig? And so one of the things that we've really wanted was both, this idea that the strategists are making recommendations to the validator set. The validator set are coming to consensus, and then trades get executed, right? So what are the things that this is helping? One is, the development of Steward can actually implement the kinds of protections against strategists doing something malicious or making a mistake that you can actually implement on the smart contract layer. There's a lot of things that come back on the audit layer, and it's like, oh, like you can't actually, like, here's a malicious thing that a strategist could do. Like, could we prevent this in the smart contract? And it's like, there's a variety of reasons that end up being no, but actually ends up being possible to sort of make that something that could never get that Steward would be able to like sort of protect against. So that's like one advantage of the architecture and the decentralization. The other thing is it's like, it's just like the people who are actually participating in the execution of these strategies are always changing, just as like validators come and leave and join the system. And there's like sort of a consistency to the system, even though if you change all the actors. So like strategists leave, new strategists come in, like the whole system just keeps working. And I think that's really the difference between something like Yearn, which is very dependent on like unorganizational structure, which is embedded in the DAO, but is like a static organizational structure, and a protocol like Sommelier, where like all the players can come and go and the system will just autonomously keep going.
So Sam mentioned institutions as potential advocates for depositing into Sommelier. I'm curious if you've ever thought of DAO Treasuries as a point of emphasis. There's some $10 billion in DAO Treasuries, and there's just such an exciting opportunity.
I think you're going to see we are all part of what is likely to be, for at least the next, at least until interest rates turn around, is likely to be the great DAO Treasury land grab. And we're riding into that war like everyone else. We've seen, almost everyone in DeFi is like fighting over like trying to manage a chunk of the maker PSM. And we're certainly thinking about that. There's a lot of NFT treasuries out there. There's a lot it's like in a world where, treasury rates are hitting 4.5%, it is pulling money out of crypto in general. And what remains, what's captive, is like what a lot of DeFi is fighting over. And we're here to go fight that fight too. And I agree that DAO treasuries are going to be, and we think that things like the real yield USD seller are going to be differentiated products that will offer a better place in the sort of risk return paradigm than other competing opportunities.
Do any of the current back tests give any indication of what a potential yield on this real yield USD seller could kind of lead to?
They do. We are going to be releasing all of that information very soon, probably tomorrow, actually, on the Sommelier forum. So I'm gonna just leave a little bit there.
Give some high level numbers.
All right,
come on, give it to us. Give it to us.
Yeah. Okay. So here's the thing. Caveats is that I don't, the back test, it's very hard to adjust to like factor in market impact, right? So it's really hard to say how this thing's going to perform on like tens of millions of dollars. But in our current tests, we're looking at something like 6% on stables. And a lot of that is coming from being able to do UniV3 optimizations and, optimizing tick ranges, basically.
Now that is exciting.
Yeah, that's super exciting, especially during a bear market. I feel like that could fill up pretty quick. Are you guys going to have any caps on that? And then also, I was curious how much thought went into kind of the design of providing historical performance of a particular vault? Because if I'm looking to deposit into one, of course, I want to see, well, is this done well? Is this done bad?
We don't have plans for capping right now. I think the nice thing with the smart contract architecture is that can kind of be flexible. Like you can never kick out deposits, but there is flexibility for a strategist to kind of set a cap dynamically, which we think is like a feature. So no plans yet, but we'll have to see how interest actually affects the performance. And could you repeat the question about, I think it was about historical performance?
Yeah, absolutely. I was just curious, like what kind of tools you provide different users in order to kind of look at historical performance of different vault strategies.
Yeah, so our front end, the Somm front end as it currently exists, essentially tracks. There's a couple of metrics there. The existing products track token price. So by token price, what I mean is the strategy share token. You can actually, the way it works is that when you go and mint shares in the contract, there's a price for that token. So performance is easily tracked by just looking at the price of that token, right? For how the value of the assets that you can redeem it for. I believe there's currently plans to completely revamp the UI because again, Sellers V2 is this new thing. So there's a lot more metrics there, like benchmarks, things like not just token price, but like a history of rebalance decisions, right? But I will say that all that information is also available on chain at the smart contract level. So that's, this is a virtue of vaults. You can just go and see everything that happens. And it's much easier to do that with these sellers than it is a lot of other products. Like it's not so easy to do that with Yearn, from what I can tell. But with sellers, all the decisions happen. It's very easy to go on Etherscan and see is my point. Nothing's hidden.
You can also go take a look at, we have DeFi Llama integration as well.
Yeah, we like to shout out DeFi Llama all the time. They're doing God's work over there. But I feel like we've already taken up a lot of your time. Do you guys want to tell people where they can find you?
I'm at Zaki Manian on Twitter. It's usually the best. ZManian on Twitter is the best place to find me.
I'm at Call Me Son with 2 N's on Twitter. I don't tweet anything, but I'm very active and I'm an observer.
Awesome. Great. Well, thanks so much for coming back on. We'll have to do it again soon.